the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
There are some new and interesting ways of making your crypto sweat. In other words, generate a return rather than simply hoping for the price of your Bitcoin or Ethereum to continue rising. Now, we know from history that you cannot always count on a bull market to generate a return. In the crypto world, generating a return is called staking, and we've seen returns of 10% or more on, for example, US dollar-backed stablecoins. Whether you're a seasoned investor or just dipping your toes into crypto, you should probably be paying attention to what's going on in this space because it's getting more tantalizing by the week. Are there risks? Certainly, but we could say the same of stocks and to a lesser extent bonds. Joining us to discuss this is General Manager for Binance South Africa, Hannes Wessels, and he's going to outline some of the practical strategies that you can do to make your crypto work harder for you. Hi, Hannes. Let's get into this. By the way, and good to talk to you again. What is staking and how can you make your crypto sweat?
Hi, Kieran. Yeah, good day to you and the listeners, and always good to be here. So let's start with Bitcoin. Someone once asked me the other day, so how do I stake Bitcoin? And I think we should go back to the way, Bitcoin is mined. It's mined on a proof of work basis, as opposed to the other coins who are all mined on a proof of stake basis. So Bitcoin in itself cannot be staked, but what we do at Binance is we do give you what we call a yield on that, an earn yield on that. It's obviously not to the same extent, can I say, or the same number as some of the others, but you get yields from 0.2 to about 3% on your Bitcoin if you place it with Binance. I think in the first instance, also worthwhile mentioning that it's not a deposit like when you deposit money with a bank. It's two very different things. When you stake your crypto with an exchange like Binance, it's done in a sense where it remains your crypto. It's not a case where, if you deposit money with a bank, basically you lend it to the bank and the bank then on-lend it. There's obviously fractional reserving in the middle and the marginal difference, but there's a big difference between the two there. In the case of crypto, it's used for liquidity purposes. So stepping away from Bitcoin for a moment into Binance's BNB coin, that's done for liquidity purposes. So that coin can then be used, that stake coin can be used to then pay other users of the platform, and for that you get a return. So I think just very basically that's what we look at, but it's a very nice way to then get a bit of yield on your crypto while you're obviously pursuing your digital asset strategy.
Right, and that yield, of course, would be paid to you in Bitcoin itself rather than in cash, or if it's in Ethereum that you're staking, you would be paid in Ethereum, right?
Correct. It's tied to the asset that you've staked.
Okay, so you can earn a very small yield, a very small staking yield on Bitcoin. Maybe just run through some of the figures, like, with Ethereum. How does it compare with Ethereum and with some of the other coins?
Okay, so each of them, as you rightly say, has a different yield. Ethereum, the number's different, but it'll be notably higher than that of Bitcoin because it then works on a staking basis. Where it becomes interesting, Kieran, is if you look at things like stable coins, and that has become more and more prominent in this current cycle of crypto, but also more so in Africa, where stable coins give Africans per se a bigger chance to participate in a quasi-dollarized economy, because a lot of economies in Africa simply don't allow for the liquidity, import, export, and the remission of money to wherever it needs to go. So these stable coins, again, we always ask our users, do your own research. But if you let's look at the big ones, the two big ones being Tether and Circle. They all publish their reserve reports saying exactly what it's tied to and what's behind those coins. Now, I say that for a reason because I suspect most of the listeners know that. But why is that important from a yield perspective is if you buy, again, using Tether as an example, you buy US treasuries. Those treasuries all earn a yield. And we know we at the top end of the interest rate cycle at the moment. So those yields are quite high. So where do those yields go? A lot of those yields go to Tether. They don't necessarily pass all of it on to the user. That's their profit margin. But in the case of Binance, our deal with Circle, our deal with Tether is we take a part of that yield and we pass it onto our users. So you participate in that yield that comes from the US bonds, the US treasuries, etc. And I think that's quite useful. So some of them there were yields on USDT flexible, what we call flexible. It's not a long-term deposit, it varies. But at the top end of that, we had 11.3% at some stage. So I think that's...
Sorry, what's the figure there?
11.3%.
Mm-hmm.
So if you compare that to, well, just your South African alternatives, I think that's very good. Now, that is pre-tax, and we always encourage all users to obviously pay their taxes, but so is your interest rates that you receive. Your interest income is pre-tax. So how that works, we've got a real-time, what we call a real-time APR, which is your base rate, and then we've got a bonus-tiered APR for when there's high-volume situations, and we try to entice people to bring their tether to Binance of an additional 8%. So that 8% plus the 3.3% gets you to the 11.3%. That's lucrative. I think no matter how you look at it, if you can get that type of yield on a digital asset that is tied to the dollar, for me, I think that's a decent liquid asset.
It does open up some very interesting possibilities here, because it's something that I think South Africans and Africans generally are beginning to wake up to, that you can actually dollarize your life. You can take your savings and you can convert it into US dollar stable coins like Tether or Circle USDC. And then you can earn those kind of yields, 10%. And I know that the different exchanges will have different deals going on. And you mentioned your flexible product there, 11.3%, which really does compare tremendously well with what you earn through, let's say, a fixed deposit in South Africa with a bank, right? Now, are you finding an appetite in South Africa and around Africa for this kind of thing, where you're able to dollarize? You're basically able to ditch your local currency because it's, if you're in Malawi, it's not much good. Tell us about that.
Yes, absolutely. I think I look at it as still two parallel streams, but they are converging more and more. Again, let's use Malawi as an example that you mentioned. So you'll always transact, or I think for the foreseeable future, you'll still transact in the local currency unit. But if you can basically preserve a lot of your capital in Tether and convert that from time to time into your local currency, that's one avenue in which you can spend. A second avenue is for merchants to start adopting Tether and crypto as a payment mechanism. And we've got some very exciting stuff that I'll talk about in a moment happening in that front. So if everybody starts plugging into this value and supply chain, and basically from a retail perspective to wholesale to import to production and export, if you can bring that whole supply chain onto Tether, that changes things substantially, because not only is everybody dealing in the same value, you don't have the foreign exchange risks that you need to hedge continuously. Your settlement times are so much shorter. Instead of doing dollar settlement through the CHAP system in New York that can take sometimes up to 2 weeks, this takes not even 10 minutes, it takes 2 minutes. So if you can pay your supply in China and it takes 2 minutes, that's a game changer from a working capital perspective. Now, bringing this back to retail and the dollarization of some of these economies, is South Africa is admittedly very different. We have a very well-functioning financial system, but we've made very good traction in the space with our partners at Moneybadger, where if you go into, let's say, a bootlegger's coffee at the moment, you can pay for your coffee with your crypto. And people say, okay, but I don't want to spend my Bitcoin. How do we do this? I said, you don't have to spend your Bitcoin. The way we've structured our Binance app is you get a specific earn wallet, which is the ones we discussed now. That's locked up. You can then transfer some of that crypto into your funding wallet. So you don't need to mingle those two. You don't get liquidated out of positions you don't want to get liquidated. You put, let's say, 5 specific coins into that funding wallet. You tell us what your order of liquidation is. That is then kept in your funding wallet. And as you pay with QR codes at a bootleggers, etc., there's quite a couple of these now, and there's a big announcement coming in the next week and a half. You pay with QR codes. We then liquidate that crypto. And I paid for a Temu package this morning, and there was the option via Peach Payment and Moneybadger to use crypto. And it was faster than using my bank account, and the bank accounts are good. So it really works. It's now part of the mainstream. Not only can you earn better yields, you can make faster payments as well. So, the day really has come that we can now say crypto is part of that mainstream system.
Okay, so this is a common complaint or a common concern that you would hear from people is, I don't want to sell my Bitcoin. I'm into accumulating Bitcoin. I'm not going to spend that. So what you're saying there is that you can actually separate out, let's say, the yield, the staking yield that you're making. You put that in a separate account, and that is what you're going to be spending.
Exactly. You literally earmark that. You do a physical transfer into your funding wallet from where you then spend it via, in our case, Binance Pay. And it is just so easy. I mean, and you've got to be critical of your own products as well and see if they compete with the others. And I was stunned this morning how quick that was. There's no in-between anymore. I just use my Binance app on my phone, scan the QR code on my screen, and it's paid. It's really fast.
What I'd be interested to find out, Hannes, is how many people are starting to do this. Given that background I've just outlined there, people don't want to spend their Bitcoin, and maybe they don't want to spend their Ethereum. But they say, you know what, the staking the yields that I've earned, that's like free money on top. That I am prepared to spend. But is this starting to gain a bit of traction?
Yes, we have seen incremental increases on a per month basis since we started working with Money Badger. They have a very good network with Pick and Pay, Peach Payments, Bootlegger, etc. And that number is increasing. It's still very small in terms of total economy, admittedly. I'm not going to say, we're 20% of what the banks do. We're not. But I think for me, once you get to that 1% mark, from there, you get to 10% very quickly because then the use case is there. And I think we're very close to that 1% mark. And I think from there, it's going to unlock a lot of potential for a lot of people who couldn't be part of the traditional system.
Does this mirror trends that are happening elsewhere in the world? People are looking for ways to get more out of their crypto and make their crypto sweat?
Yes. Our CEO recently went for what we call a working holiday to the Kingdom of Bhutan, and they only operate on cashless systems, and a lot of that is now crypto-based. He structured his holiday around this, and he wrote a blog about it. I encourage everybody to go read it. But he only did that entire trip using only his Binance app. So there's other countries who are even more advanced than South Africa, but we're definitely not laggards here. I think, you look at the bigger economies like the US, I still think there's a lot of stuff where they're still finding their feet. I think the current regime there has enabled a lot of that for crypto. But South Africa is definitely not behind. I think we are innovating really well.
Yeah, I would imagine the United States is ripe for a crypto revolution. Still, a lot of people make payments in terms of paper checks. Quite unbelievable. South Africa is far more advanced in that sense than they are over there. But they're also leapfrogging with all of the crypto services that you have over there.
They do. And it's always inspiring to look when that leapfrogging happens, what are they doing that we could adopt? I think, there's that old thing about iterating and then replicating. And a lot of these stuff's iterated to a point where you've got a very good minimum viable product and we can adopt it locally. And for any innovator and entrepreneur, I think that's the type of stuff you should keep your eye on.
Now, for more sophisticated users, there's arbitrage opportunities. And we're talking here about, ZAR USDT, which is Tether. Because of exchange controls, there's always a little bit of a difference in pricing between buying Tether or Bitcoin overseas and in South Africa. Although that arbitrage gap has diminished very much over the last year or so. Are there people that are in on your books who are very enthusiastic about this arbitrage?
They are. I think what I will say is, again, this is a spectrum and it's evolving. I think 3-4 years ago, I think the margins for arbitrage was much bigger. It's a volume game. The higher the volumes, the lower the arbitrage margins. And let me go one step further. It's not only a volume game, it's an access game as well. As more people gain access to these rails, at some stage it just becomes an efficiency curve where a lot of it's bot-driven. There's a lot of these operators in South Africa who's built very competitive products. Some of them even sell it to investors, and I think it's something worthwhile looking at. But it's becoming more and more competitive. And as it becomes more and more competitive, it becomes less and less profitable. That's how it is. But it's a very important part of any financial system. And that's why we've always enabled these things, because not only do you have these, what we call the ZAR rails, the RAND rails, you also have arbitrage opportunities between exchanges. Let's say Binance and someone like BitGet both have a BTC USDT pair. But they said just because of trading volumes and who's on the system, the price difference opens up. A lot of these guys have trading bots designed to ping both networks via the APIs simultaneously. And the moment that ends or that opens up beyond a certain point, which is normally your margin, that's when they start trading, and it closes the gap immediately. So for me, it's almost crucial to the system because it immediately balances the system. It immediately brings the prices back into parity. So that has evolved a lot. We're now also seeing some of the more sophisticated users going into futures and spot arbitrage. So if you have a futures position, let's say on a one-to-one basis, so with no leverage on BTC USDT, and you have a spot position, sometimes those trading pairs or those positions can bifurcate as well. And if you have a good system, you can bring those in line, one short, one long, and vice versa. Definitely see a lot of that stuff happening as well. And again, that means it implies a financial system that's at parity, and that's what you want. I don't think a lot of the traditional systems can always say that.
Final question, Hannes. If we look 1 or 2 years into the future, we've been talking about some of these very interesting staking products that are coming out. Where do you see this going? Is it just more adoption? And as you get more adoption, obviously there's going to be more demand for innovative products. Where do you see this going?
I think the payment area will be where a lot of the development will happen as those borders between what we call TradFi, traditional finance, and crypto starts disappearing. I think that's where you're going to see a lot of adoption. As people adopt that more, Kieran, I think they will start looking at crypto as a viable option to basically park your value, store value. And where people want to store value, they want to get a yield. So I think the one drives the other. I think the Binance Pay product, working with our partners, that drives adoption because it becomes something you can do reliably. And as people then migrate onto the system, because this is now a viable option, they're going to look for some of the other options. So the one is the gateway, the other one is the destination. The more people come into that in space, the more products will come into it. I think crypto has had many phases, and someone reminded me this morning, what happened to Terra Luna. I say to everybody, please do your research. Only place where you understand, know who you are dealing with. So, if you stake with Binance, you know who you're dealing with. We publish our reserve reports, etc. But sometimes people get enticed to move outside of the boundaries of regulated exchanges, and you don't always know who you're dealing with. And I'm just saying, guys, please do your homework. Know who you're dealing with. It's just good old counterparty management. Who's the person on the other side of the trade? And if you can't identify them, maybe it is too good to be true. Just do your own research, and I think everybody will be fine.
Right. And of course, understand the risks as well.
Yes.
We're going to leave it there. That was Hannes Wessels, General Manager for Binance South Africa. Thanks very much for joining us, Hannes.
Thank you, Kieran. Always a pleasure.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.